final section of this session is an interactive panel, and the discussion is going to be on the future of the consumer experience in New Zealand. I'm now going to hand you over to the Head of Design and Innovation at Grant Thornton in New Zealand, that is Melissa Jenner, who is going to be facilitating this panel. So could I have the panellists up on the stage? And Melissa, over to you.
I work in the innovation space, and this is a pretty interesting topic to me, both because of that and because I'm a massive shopper. And I think that the point of payment is possibly the opportunity for the greatest pain in any kind of shopper's life. So I'm really excited to see this industry tackling it. So we have 5 great panellists here. How we're going to run this is we're going to have a conversation on 3 things. We're going to talk about frictionless experience, which seems to be topic du jour. We're going to talk about innovation trends in the finance and banking sector and what capability we think we need to build or is already being built in New Zealand. We'll do a Q&A, and hopefully if we get time we will open up for some questions. I'll just quickly introduce the panellists to you. They've all got international experience and long CVs. I won't go through that in detail. But Steve Holmes, who is here. Steve is the COO of Transaction Services Group, which is a New Zealand-owned global direct billing service and apparently transacts 50 million transactions on an annual basis. He's really interested in almost creating an absence of an experience, which I thought was kind of fascinating, given how much money we make out of transactions. And he's watching about how we can use subscription services to innovate the payments model, almost kind of paying less or paying for the right to use. We have Phil Worsley here, who's the Head of Strategy and Operations at Spark. He's got about 13 years telco experience onshore and offshore. And he's interested in how we can make service a differentiator in a very cluttered space. He thinks that there's a lot of sameness in our industry. And so how do we use all the tools, not just payments, to differentiate? We've got Rob Bourne, who's the Director of Digital at Amex, and he's been with Amex for about 12 years, and had an interesting conversation with him. As a Director of Digital, he's almost interested in all the things that surround the digital experience and how does a brand not just focused on the payment, but also the experience wrap. We've got James Woodward, who's right here, who's the General Manager of Enterprise Operations at Kiwibank. 15 years banking experience plus also clearing, a lot of experience in that. And he's interested in simplifying the experience. Thank God you're here to talk about that, James. And how do you focus on creating customer value? And last but by no means least, Stephen England Hall. Thanks for coming, Stephen. He's the CEO of Loyalty New Zealand, probably better known as the Flybuys guy. And he's interested in how his organisation generates more utility for customers and more intelligence for their clients. So, thanks for leaving a space for me. Let's kick off. We've got about 25 minutes, so let's jump into it. So this whole concept of frictionless customer experience, I hear it all the time in the innovation space. It's not just the payments people thinking about it. I think it came out of the airlines originally. So we're all trying to focus on it. I don't think it's a new concept, but what is your take? I'll go to you first, Rob, actually.
Okay, so
what's your take on how we're doing at this?
I mean, I think as we've all talked about this morning, frictionless payments is certainly a goal for all of us, and really you only have to look at the products that customers are gravitating to that really do deliver those frictionless experiences. Things like contactless payments and mobile payments are a testament to that. And as I look across the Tasman, I mean, seeing Australia really lead the world in adoption of contactless payments because it is so frictionless and it delivers value for customers and merchants. I led the team that led the launch of Apple Pay and Samsung Pay and Android Pay in Australia. And again, the launch of and the adoption of all of those wallets, again, is testament to the fact it's delivering a frictionless experience at the point of sale. I think for the industry generally, I think looking at not just the moment of payment, but also looking at the full purchase path is really important. Looking before, at and post that moment of payment, not just thinking about payments, but also thinking about loyalty experience as well, I think is really important. We've all been at the supermarket or petrol station sort of digging through the wallet to trying to find the right loyalty card that we want to use. And I think that's a key thing that we can try and reduce friction in. For American Express, just quickly, I think some of the ways that we're looking to reduce friction at the point of sale, we've launched capabilities that allow us to deliver couponless offers at the point of sale. Because we're in a unique position, we can see both sides of a transaction. We can see who the customer is as well as who a merchant is. And by doing that, we can deliver instant confirmation of an incentive that has been applied. So for example, we ran an offer this year of spend $30 at Countdown, you get $10 back. The moment that customer makes that transaction, they're instantly getting that confirmation that they're getting that $10 credit onto their account, and that's because we can see both sides of the transaction. And so I think it's an exciting time and a lot of opportunity on the back of it.
Okay, so Steve, you kind of sit in the middle of all this mess. What's your sort of take on frictionless? Because you're processing things in many, many ways.
Yeah, I think if we take a step back from the payment experience itself, and we think about how people are actually consuming products and services, you've got a big rise in the area of subscription payments, but you've also got a big rise in terms of products that are free, maybe advertiser driven, or freemium products. So increasingly, the payment experience is actually being separated from or isn't a part of our consumption of products and services. So I think as a result of that, you would say that our tolerance for friction or for effort in terms of payments as consumers is at an all-time low, and it's probably getting lower.
Yeah, that's a really good point. And Phil, we were talking earlier about, how does this affect how you design products and services, because you're in the sort of consumer space. So,
well, yeah, I guess I heard a really good phrase the other day that checkout is the new check-in, and I kind of like that. If you think about Uber, it's about making payments invisible. No one cares about it, and they don't want to see that they've made a payment because it reminds them they're guilty, they've spent some money. So we need to make it as seamless and easy as possible. And Uber, you don't realise you've paid. It's effectively free, perception, until you look the next day. They've taken all that payment and they've put it up front. You do it once, and then you can have multiple trips, and you never pay, apparently. So, and that's what we want to do in store. What we do instead, though, is we have a wonderful experience where we help you buy something, and then we take you to a counter and make it a horrible experience. And so how do we make that invisible? And that's why we talk about, the checkout, the new check-in, etc.
So you're making it sound really easy almost, but Steve, going back to you again, what do you think are if it should be this easy and it should be this straightforward, what are the barriers to the industry kind of getting to this space of?
Yeah, well, I have to be mindful that we're in a certain space, but if you think in New Zealand in terms of recurring payments, when a consumer initiates a recurring payment arrangement with us, 75% of them will choose to initiate that payment directly via their bank account direct debit. 25% of them will choose to use their credit or debit card. Now, if there's some sort of event that means they then need to make an immediate payment to us, a failure of payment or a supplementary payment, or they want to pay something in advance, that flips over. All of a sudden, 75% of them use their credit or debit card, 25% of them look to use their bank account. This is mostly web or mobile channels. You take it a step further, for those customers who are choosing to use their bank account, they're 4 times more likely not to actually complete the payment process. I don't mean that they don't have sufficient funds, I mean they don't get to the finish line. And that points to a real deficiency, I think, in terms of the direct bank experience through those channels, through web, for example, relative to using my credit card or my debit card.
Yeah, so you're bringing in an interesting topic around cards and loyalty, and I've got like 10 cards in my drawer that I never take out for loyalty schemes. So there's kind of a tension between loyalty and frictionless, right? Because the traditional thinking of loyalty is cards and programs. And so James, you're in a bank, and I'm also going to come to you as well because this is your topic, Stephen. But if we just start with you, do we need to therefore kind of rethink what we mean by loyalty in this kind of frictionless world?
Yeah, so I think payments and loyalty absolutely go together. They're all the same kind of value chain. I think what's really struck me over the last wee while, and probably even more today, is actually as Kiwis we've probably become quite ambivalent about our experience, because actually it's not bad. So if you look at the payment direction work, it actually calls out that Kiwis are mostly satisfied with payment, etc. And I think we're kind of mostly satisfied with loyalty, but I don't think we're actually surprised and we're rewarded and those sorts of things. So there probably is quite a big piece of work that we need to do as a collective to actually jumpstart. Otherwise, we're actually going to be quite left behind. So when I put on my New Zealand Inc. hat and I watch what's happening in China and Aussie, actually, they're going to springboard to the next level, and there's a real risk for us that we get left behind, that our businesses get left behind, etc.
So Stephen, big topic for you, loyalty and cards and payments and processing. How can you enlighten us about where this is all heading?
Yeah, I mean, I think the comments that have already been made are bang on. I guess the only thing I'd add to that is that we make two assumptions. One is that payment's about money, and it's not. Payment's about exchange of value, and I think what we'll see in the loyalty payment space is the growth in alternative currencies, because I think that's kind of like the next wave, if you like, of payment is I'm not going to pay you with a New Zealand dollar transfer, I'm going to pay you with some other form of cryptocurrency, right? Because I think that's clear. In New Zealand, we're very fortunate. We've got 3 major loyalty propositions in action, and they all trade in value. So they're all used to dealing with either air points or flybys or discounts if you're in the Countdown Smartphone universe. And all of those things are effectively other forms of currency and payment. So I think you're going to see that stuff evolve rapidly, and I hope it evolves rapidly because I think it'll be good for the consumer ultimately. But it comes to the point about the event. I think my observation, my question probably to the floor out here is, when was the last time you thought about the payment itself? You know, when was the last time it was actually part of your experience? Like, you know, in terms of the comments Steve made, it's not really conscious. I think most consumers don't give a rat's about it unless it doesn't work, right? Or, you know, or the billing doesn't happen for 3 days, or some other event occurs. That's when it kind of comes to your attention. And I think that's the beauty of it. The elegance of it is making it utterly simple and utterly, if you like, beautiful from a customer point of view. And it's the kind of the last threshold or the last barrier to realising the experience that you were seeking. Is the payment component. And I think, well, how do we shift that? How do we, you know, how does payment and loyalty and experience and frictionless all come together in a way that just enables you to go about your daily activity or your monthly activity in the way you want it to occur for you, not in the way that we previously defined it. And I think that's the kind of shift.
So we're talking about innovation, because innovation is about creating new value and driving new value. You know, a lot of people think that New Zealand's a good starting place for innovation, and we're a good country in terms of, you know, creating new change. Phil, what's your view on that? Do you think we're leading in terms of innovation or not?
Well, I'm a bit nervous to say because I'm in a room full of banks. But no, I think we're resting on our laurels. You know, I think in the past we were awesome with FPOS and we led the way, etc. I think maybe it's a result of our legacy systems, etc. But I think just like in telco land, obviously we're at risk of over-the-top players coming in. And I think we need to stop talking about technology. You know, the consumer doesn't care about contactless. What they care about is they're paying and it's really easy. It just so happens they're doing it via contactless technology. That's fantastic, but all I've heard this morning is a lot about technology, not about what the customer wants to experience, not about we're giving the customer time back. By using contactless, you're saving time, you're getting out of here quicker, and you're getting the service you want, and it's really easy, and we'll bill you reliably every month, etc., etc. That's where I think we're missing that ability to use payments as a differentiator. You know, so.
I was going to add to that I think if you take the notion that loyalty is an outcome, right? So if we say that loyalty is the outcome of doing the right things for people, then what are the right things, right? And I think that comes back to putting the customer at the centre of that conversation and saying, well, what are the right things? And I think the opportunity for innovation in New Zealand is we're actually really small. We operate a single system. We have common standards. We have one legal ecosystem that we operate within. We haven't got to deal with federal and state type regulation. We've only got state. And I think those are all key factors in enabling the payments industry or the banking industry in New Zealand to actually move forward faster. Most other markets, anyone who works internationally would realise how complex even Australia is comparatively to New Zealand. And so I think we have an opportunity to take advantage of that.
So Rob, you're part of a global corporation, and you told me earlier that Amex uses New Zealand as a bit of an innovation hub. Can you tell us a little bit what you're doing? And is it beyond, for you guys, everyone thinks you're about cards. Where are you heading with your innovation? Yeah,
I mean, I think for us at American Express, I regularly have discussions with my colleagues up in the US, and I encourage them to think about New Zealand as a production sandbox in a way. You know, as an example, we're launching, and we have launched the global pilot for our new online services in New Zealand. We're a perfectly digitally savvy market, predominantly English-speaking market. Savvy with our use of cards, and so the US business for American Express absolutely views New Zealand as a perfect test bed in that respect. Yeah.
So let's think about the future. Let's think about where we've heard a lot today about, you know, what other countries and organisations are doing. What is the opportunity for really truly innovating and creating delightful customer experiences? And James, I'm looking at you because I'm hoping you've got the answer being Kiwibank.
Yeah, indeed. So I don't think I've got all the answers, but I think there's some pretty clear themes out there. So, I mean, we're a nation of people and businesses that want to trade with the world. So there's a lot of work that we actually need to do to actually make the payment process actually take us closer to them. So a lot of work in that space. I think, and the guys over here really talked about it, the biggest risk on that, and to us not actually advancing it, is that complacency. So it is simple. So actually, we don't have the compelling reason to invest. The value equations aren't there as strong as in other places. But actually, I think that's where we will be potentially left behind, and New Zealanders and New Zealand business will actually be left behind. So there's a lot of work to do there.
Does any of you have any global examples in this space of sort of breakthrough innovation that we could learn from? Steve, have you?
No, look, I think if we think about that innovation question in the context of our business, and I do talk technology, I guess we're a Western business, so we're talking New Zealand, Australia, the US, the UK, the European Union. We do some good stuff. There's some stuff that is weak. I think we should have zero sense of comfort or complacency about our position as innovators.
Sorry, just
Yeah,
a
do you want
question, but do you think there's a conflict? As a retailer, I actually don't want to give payments to yourself or the banks. I actually want to get the customer to put everything on account. If you look at our last 2 months, 30% by volume was cash, 20% by value was cash. The rest is on account, and then credit card and debit card. And we want them to put it on account so that we own the relationship with them and we reduce churn, we get stickiness. If we let them pay on credit card or whatever else, we lose that relationship, and we also lose the ability to leverage it. I can email the invoice, I can follow up. There's a bit of conflict there, isn't there?
I think perhaps the opportunity there is to, if you take that a step further, you're saying, well, people want the banking services available to them, not necessarily the bank, right? And I mean, I'll be careful, one of my shareholders is probably in the room. And it's, but there is that conversation to be had. What is the role of enablement versus being the pipe that sits in the middle of it? And I think if you look at what Xero's doing in the ecosystem it's developing out, very good example of building an ecosystem of data which enables a closer relationship between a business and its clients or its customers. Do they need a bank to enable the transfer of funds and value between the people that are participating in the ecosystem? Probably not. Yeah. Do they need services that enable transactional value to be transferred? Yes, they do. And so I think there's some really interesting stuff happening in that space.
And there's also obviously a large number of other services that customers do want to have as it relates to the method of payment that they may be using, be it rewards, be it other benefits that they get. So I think it's also coming back to the point of the customer and how does the customer want to play and giving them the choice.
Yeah, so actually I think one of the things I would say, kind of from a banking point of view, is there's a range of services that we actually apply around payment as well. So, I mean, payment sits in a portion of the value chain, but we want to help customers build wealth, manage their financial risk, all of those sorts of things. So actually it's a similar story for us as it is for yourselves.
So how do you make choices about what kind of payment strategy you get behind? Do you start from your customer segments, James, or what's your approach to, there's lots of different options out there, right? As a bank, how do you think about what options do I present to who?
Yeah, so I think it is very simple. It is actually about where is the value for the customer. And that's where a lot of our focus has gone over recent years. So we were an early mover in terms of actually near real-time payments, and we saw a big market and opportunity for our customers to actually leverage that money earlier in the day, and we really benefited from that, and I think the industry actually benefited from that. I think there's a lot more opportunities in there, especially in that small business space again. We're actually managing their financials is hard, invoicing is hard, all of those sorts of things. But it's very much more around actually tying that wider value chain together rather than just focusing on it as a payments problem.
Did you want to add to that at all, Phil, in terms of the Spark environment, and how do you think about different payment options for your?
Oh, well, it's pretty simple. It's whatever the customer wants, with an eye on the fees, obviously, and an eye on Net Promoter Score, an eye on stickiness and how it's going to help us manage churn and get them coming back and repeating their journeys. So, yeah, customer at the centre, but really, as opposed to what we've said in the past. Yeah.
So I've heard this concept, and I don't actually understand it, but this concept of a digital wallet, and I think you guys probably understand it, but do we think it's actually here in New Zealand, or is it just kind of talk? Where are we at with this whole concept of a single, I mean, I think I've got an app on my phone, but I don't even know what it is, so do you want to talk about that, Stephen, maybe? Do you want to?
Yeah, well, I mean, I'm sure my colleague to the left here, with his experience with Apple Pay and Google and so forth, probably has a closer view of it than I probably do. I think we've had conversations with all of the different, I guess, players in that payment space and in the wallet space, purely because of the relationship between loyalty and the data and the customer identity, and how we can feed data into that digital experience to enable something to happen that probably wasn't possible before. And so they've all had those conversations. But when we come down to dialogue with the consumer, there's a lot of questions in there around what value is it really adding yet? That's not to say it's not going to, but it's just, there's a real question about, are we really in desperate need of it? If you look at markets like Africa, for example, and even North America, where there's hugely fragmented payments networks and there's lots of complexity, the idea of creating a digital, multi-channel, multi-purpose wallet that's cross-border, cross-market, cross-state actually has real value. In New Zealand, we don't have some of those barriers. I mean, I don't know about you, but the idea of getting off the ferry and tapping my MasterCard or Visa to pay for it is simple, easy, not even available yet, but I'd like to see that happen rather than having to get another AT card on the side. Does the digital wallet enable that to happen any faster? Probably not. Does it add more complexity? Yes, it does. Would I have to stop at the barrier, put my thumb on my screen scanner? Yes, you've just added another layer of complexity for me. So the question really is, what's the value add? What's the real benefit? That's just my personal view, but it's not, I can't see it taking off like a rocket ship until there's real value being added for the end consumer.
Yeah, I mean, I agree. I mean, we're in a unique position where within American Express in Australia, we've launched all of the 3 major digital wallets. So I think that there's very little friction in using a contactless card, but equally, customers do love the ability to just go for a run, use their watch for a payment, or to use their phone. But your point, Stephen, I think around the expansion of the use cases that a mobile wallet provides, going from just payment or to also incorporate loyalty and other factors, transit, I think are great examples where we're constantly walking around with our telephones and mobile phones and can start to use those services in a more cohesive way.
So how do we take the customer on this journey? It sounds like there's lots of options, there's lots of clutter, there's confusion. I'm confused. I don't know which way the industry is going to go. How do you take people like me, the shoppers, with you? And how do we coordinate as an industry so that the consumer's not kind of left doing all the hard work on learning about all this new technology? Who wants to have a go at answering that? Maybe you, James, because you're sitting next to me.
So I definitely think there's something in actually collaborating around what are the rails that we actually lay a lot of this down on. So I think one of the big risks out there is really around actually cluttering the system, cluttering the experience. So actually, how do we make it clear for both the consumer and the merchant and the providers in terms of what the rules of the game are? There's a real freedom within structure, I suppose. It doesn't feel like we're moving fast enough on some of those rails. It doesn't feel like we've actually got that next jump to actually get us underway. So I think that's...
What will it take, do you think?
Yeah,
Should we ask someone else?
Really good question.
What will it take to sort of fast forward this? And there's a lot of clever people in the room and a lot of experience. What's it going to take for us to...
Well, if I could zero down on the problem I raised before around direct bank transactions, it's about cooperation, collaboration, and a sort of consistent user experience that consumers are comfortable with, right? So wherever they're doing or whatever they're doing, that idea of a web-based direct bank transaction is familiar and comfortable to them. So that's how I'd see it, rather than further fragmentation around that experience.
We just got a couple of minutes to sum up, and then we'll take some questions. So if we just, each of you want to just leave one message with your colleagues on how do we really lift the game on this consumer experience. Do you want to go first, Stephen?
Yeah, sure. My thought was somewhere completely else, but I'll try and come back here. I guess the thought that springs to mind is about ecosystem collaboration and the opportunity for people to invent and participate on top of a common ecosystem. I think it's really powerful. One of the questions you'd ask is, as we look at things like, our own independent payment network like Paymark, when I say independent, I mean it's not owned by Visa and MasterCard and UnionPay and others, versus the schemes, one of the questions I think we need to consider is, where's the value in that equation? So if you're trading off the ability to innovate locally and domestically versus leveraging third-party applications and services from abroad, they will have different effects. They'll have massive effects on how the networks will operate in the future. So the question is, which side of that equation do you want to be on? Do you believe you're better off to innovate independently, or are you better off to simply just receive the services developed by someone else? I think that's a really big question that most of the organisations in this room will probably need to be grappling with.
As I think about the evolution of the industry, if I look at the fact that point of sales are becoming increasingly digital, if I think about the form factors that are ultimately changing, tokenised payments are becoming more prevalent, the idea of checking in rather than checking out, I think there's going to be an absolute explosion of innovation coming through, and as various services that are opened up that really allow those bolt-ons and that innovation to happen, I think it's going to be a really exciting few years. Yeah.
So co-opetition sounds like the name of the game. Steve, what's your...
Well, I'd say take ownership of it. I think most of what we've talked about here is forget about technology, think about the customer experience. So much of what's happening in the industry at the moment, that fragmentation and the innovation is occurring around people trying to take control and solve for the customer experience. So you can stay where you are and you can be plumbing, but people don't put a high value on the plumbing. They're putting a high value on that customer experience. So you take ownership of it or someone else will.
I think banking and maybe telco, we were running the risk of being a dumb pipe, obviously, with people just coming over the top. I'm not sure if I can make an analogy to banking, but there's lots of people coming in over the top in that area, and that's why we had to put things like Lightbox or Spotify, etc., to add some value before Netflix and others take it away from us and just use us as a dumb pipe. That could happen in banking with Android Pay and Apple Pay, etc. So I still think that it's in an industry where it's all about sameness, we all have the same products. Everyone can call or data or texty stuff. You need to be able to differentiate based on something, and that's customer service. And so I would love to see us all focus on the customer rather than the technology. The technology is just an enabler that comes along, and if we built the journey about the customer, then the technology will come. We should stop looking at technology and look at what the customer wants, and then the technology, we will just find it and build it, and it will, it's a piece of cake, copy paste, so to speak.
James, did you want to add anything?
Cool. So if I was to put my New Zealand Inc. hat on, I think my key message would be about actually taking ownership as well, getting together as an industry, actually stepping forward, owning our destiny. I think if we kind of sit back, actually the cost of the clutter that could come upon us, the security risks of that clutter, and the customer confusion could be a real challenge for New Zealand going forward.
And I work with a lot of companies in innovation. What I would add to that is this industry group should work with the end user, the merchants, the retailers, because they're all struggling with the same things. I think it's about getting outside of our industry group and talking to the people that are closest to the relationship with the end user, because a lot of companies are struggling with what you were struggling with, so working together sounds like the good way to go. So I think we have a couple of minutes before break to take some questions for the panellists. If you want to direct your question to someone or anyone, if you have a question. Anybody? This is a good thing, maybe? This is a bad thing? Maybe baffle them? Anybody got any questions? All right. Well, let's have a round of applause and thank our panellists for their insights.